You're right. I mean, the oil markets are in a little bit of turmoil. If you speak to OPEC Plus, you speak to Saudi Arabia, you speak to the UAE, these countries yesterday made clear that as far as they're concerned, the move they took was a move that was necessary, and it was necessary to stabilize markets. One thing I just wanted to say before we continue, so we're talking about a 2 million barrel per day cut. That's the headline figure. You just mentioned it. The thing is, what we need to understand here is that this was actually a 2 million barrel per day cut in targets. So the way OPEC Plus has been functioning for the last 2, 3 years is essentially when it goes to have these meetings, they agree on moving the targets up or down rather than actual production. And as of August, the latest month, which we have figures for, the OPEC Plus producers are producing roughly 3.5 million barrels per day below their targets. So the effective cut in actual production cut that we're going to see from yesterday's decision is closer to around 1 to 1.1 million barrels per day. That's a figure that the Saudi oil minister gave yesterday.
Well, that is an interesting point that you made. So maybe not as contentious as the reaction has been, but is there a sweet spot that these countries look at in terms of what they mean by stabilization of the oil price?
So OPEC as an organization, they will always come out and say that we do not look at oil price. We do not target oil prices. Now, obviously, privately, I think a lot of these countries have their sweet spots. They all will privately talk about what they would prefer, what they would like, especially if you look in the Gulf. Currently, prices are down significantly, I'd say, over the last 3, 4 months. But when you look, historically over the last few years, it's still quite high. These prices are not bad for these countries. They're quite enjoying, a boom, let's say, when it comes to the oil revenues they're getting in. So they're enjoying this period of time. Now they will, again, when they talk about their discussions, they point to the fact that they're seeing demand weakness. They're seeing the threat of recession just around the corner. They look at China, which is really a major demand center of the world, which is struggling to get out of these COVID lockdowns because of their zero COVID policy. So they're essentially decided that they're going to take this kind of action to get ahead of that issue.
It can't be helped but to be seen in a political light, given that one of these nations is Russia, who will benefit from this cut in production. And, the US in particular pushed for this not to happen because it does look like OPEC nations are siding with Russia. Is that the case, or do they see this very clinically in business terms?
So they as a group will say that they saw this clinically. They as a group do not like to... They say they're a technical organization. They leave politics at the door. But if we're talking about OPEC was the group that we were talking about as of a few years ago. More recently, we're talking about OPEC Plus, this larger group. That plus effectively is Russia with a few other countries, about 9 or 10 other countries. So Russia is a part of this group. So if we're talking about whether the Gulf countries or Saudi Arabia is siding with Russia, I wouldn't necessarily go so far as to say that. But there's a clear understanding within OPEC Plus just how important Russia is to this group. This is a 10 million barrel per day plus producer under normal circumstances. And that brings a lot of additional clout to a group that, a lot of people were saying their impact on the market was waning in recent years. So they know very well that Russia needs to be kept on board, so to speak. So whether this is a decision to hurt the U.S. or whether this is a decision in favor of Russia, I think more likely this is a decision that all of them as a group thought was the right move for them. They will also say it's right for customers. So I mean, this is what I would agree with as well.
Yeah. For customers, though, it can mean a lot more pressure, and politically, so many countries are under enough pressure on the inflation front. It's also very difficult for countries in the European Union who are really struggling to wean themselves off gas and oil supplies from Russia.
Yeah, absolutely. This is an issue that was raised yesterday in the press conference. This is an issue that we've raised with the ministers before. When they look at the situation, though, they'll point to one thing. The issues that we're seeing in Europe at the moment are largely down to gas. They're not actually oil issues in that sense. As far as they're concerned, there is enough oil supply in the market. When it comes to oil products, this is an issue of refining capacity. There's a lack of refining capacity because of reduced investment of the last few years. And when it comes to gas, that's what they're lacking, not necessarily oil. So they kind of look at us and say, why do you always focus on the oil? Look at everything else. The Saudi oil minister he put out a table yesterday, this showing the difference in prices between several things, so oil, gas, coal, between January and September. And when you look at those numbers, you saw that oil prices are maybe, I don't know, between 5 and 6% higher than they were in January. But when you look at things like LNG, gas, coal, these are much, much higher. We're talking 50, 60, 70 higher percent difference. So as far as they're concerned, they're just saying, let's be fair. Let's look at the situation at the moment. When it comes to oil, we're not in a bad situation. We could send you more oil. But the problem with Europe is they don't have enough refining capacity to take that oil.
Interesting. So, when we come back to your original point, Nader, what do you think the impact is going to be on global markets with this reduction in production?
So this depends on a lot of things. We have to look at fundamentals here. They're focusing on the demand side, which is demand side weakness, which I mentioned before. But we also have to look at the potential supply side. Looking at supply, just around the corner, December 5th, we have a pretty major event here. December 5th is when the sixth package of EU sanctions is kicking in. That's the EU embargo on Russian oil. So that's coming. The G7 has been trying to push this project, this plan of this price cap plan, to see if they can sort of improve the situation and actually bring that in before the embargo comes in. Right now, details are still very sketchy. It is unclear whether enough countries, possibly China, India, those are the most important ones, will buy in. That's very important to see how things will move forward. But also, you have to see how Russia will react to such a move. Russian President Vladimir Putin has previously said that if some countries do actually come and abide by this price cap, we're not going to sell you oil. Whether that happens or not, it's unclear. But really, we have to see how these two issues mesh together to see how things are going to look in the new year.
Quite a lot in the debate. Nader, appreciate your analysis for us. Thanks so much.
Thank you very much for having me.